Hello everyone, welcome to IVT 101. In today's video you are going to learn about what day trading is, so, sit back and let's begin. What's day trading? Day trading is the practice of buying and selling stocks in a short time frame, typically a day. The goal is to earn a tiny profit on each trade and then compound those gains over time. How day trading works. Volatility is the name of the day trading game. Day traders rely heavily on stock or market fluctuations to earn their profits. They like stocks that bounce around a lot throughout the day, whatever the cause, a good or bad earnings report, positive or negative news, or just general market sentiment. They also like highly liquid stocks, ones that allow them to move in and out of a position without much affecting the stock's price. Day traders might buy a stock if it's moving higher or short sell it if it's moving lower, trying to profit on a stock's fall. They might trade the same stock many times in a day, buying it one time and then short selling it the next, taking advantage of changing sentiment. Whichever strategy they use, they're looking for a stock to move. And now, let's talk about day trading rules and risks. The Securities and Exchange Commission makes it clear, day trading is not investing. Investing involves a fundamental analysis of stocks to determine good long-term prospects. Day traders, on the other hand, use expensive, state-of-the-art technology and technical analysis to spot intraday trends they may be able to capitalize on. The Financial Industry Regulatory Authority has written rules to regulate this fast-moving practice and to educate investors about the potential for significant losses. And now, let's talk about a critical point that you must understand if you want to be a day trader, and it is, what is a pattern day trader? If you execute 4 or more trades within a 5 business day period and those trades account for more than 6% of total trades in your margin account in that same period, you're considered a pattern day trader. As a PDT, you'll be required to maintain $25,000 in equity in your day trading account, which must be in the account before you start trading. If your balance falls below this threshold, you won't be allowed to trade until the cash and securities in the account are back up above $25,000. And now, to finish this short video, let's talk about day trading taxes. For those entirely new to financial markets, the basic distinction in tax structure is between long and short-term investments. Long-term investments, those held for more than a year, are taxed at a lower rate than trades held for less than a year, which are taxed at the normal income rate. Well amigos, that was all for today's video. If you learned something about day trading, please click on the like button, click over the bell and make sure to subscribe. Blessings and see you next time.